Hi, I am Anna. I come from www.ntvforex.com. Silver bullets fly in Asia. http ntvforex.com News ID 17CAC6 7/22/2025 38:05 am. Being a werewolf in Asia today is a hazardous pastime, with silver bullets flying everywhere. Silver exploding 7.0% higher this morning, mirroring an almost identical move yesterday in Asia in both scale and timing. Silver is now higher by some 15.0% for the week. The aggressive rally has also dragged gold higher by 1.0% today, with the yellow metal $50 higher than Monday. Silver may have been the beneficiary of a double whammy. Firstly, as the poor man's precious metal, catching gold's tailwind from negative real yields across the U.S. yield curve. Secondly, it has industrial applications and will thus benefit from the buy everything global reflation trade prevalent in markets this week. Silver itself always has serious liquidity issues when compared to gold futures, for example. That means that when silver moves, those moves can be extreme. Silver is now nearly 30% higher from its June lows, having traced out strong support at $17 an ounce and seems to be a stealthy directional indicator for markets elsewhere. I would hazard a guess to say equity markets and currency markets are unlikely to correct until we see silver do so first. The overnight session was notable for the renewed energy seen in the great US dollar rotation trade. The dollar fell almost everywhere as the tailwinds from the EU pandemic package and the inspiring news on the COVID-19 vaccine front turned into hurricane force winds. The trade-centric Australian dollar was a notable outperformer, climbing an impressive 1.60% to 0.7130 as a proxy to the global economic recovery. Euro and sterling also outperformed, rising 0.60%. With the data calendar for the rest of the week strictly second-tier, sentiment and momentum will continue to drive markets. Notably in the currency space, some notable breakouts versus the USD 0LLAR have occurred, or appear likely to very soon. The same can also be said for precious metals and energy. One risk point that seems to have been pushed off the headlines is the next fiscal package from the U.S. government. The present package directing monetary transfers to business and individuals, effectively ending this week. Congressional Republicans and Democrats are far apart at this stage, and a complete breakdown in negotiations would inevitably take the gloss off the recovery rally. For now, however, markets seem to be pricing in that sense will prevail. That is not a concept we are used to from Washington, D.C. these days, but if the European Union can do it, I guess anyone can. For now, despite its dislocation from everyday reality, the FOMO, V-shaped global reflation trade has strong momentum, with its underlying central bank easy money forever engine room continuing to run at max power. Either sit on the sidelines and watch the show unfold, or get on board for the ride. Picking tops though in this environment, is a hazardous occupation, and only for the brave, very deep-pocketed, or foolhardy. Equities pause for breath. Ahead of Microsoft and Tesla earnings today, Wall Street paused for breath last night. The Nasdaq retreated by 0.80%, while the S&P 500 rose 0.17% and the Dow Jones rose 0.60%. The moves overnight look very much like a basis play between the main indices. With profit-taking pushing the Nasdaq lower, that money was shifting into the previously lagging S&P and Dow Jones. U.S. stocks, though, appear to be merely pausing for breath, before continuing higher. Much the same pattern is appearing in Asia today, with Asia cautiously bullish except for Japan and notably, Australia. The Nikkei 225 has retreated 0.40%, with sellers appearing ahead of Japan's two-day holiday starting tomorrow. Across the rest of Asia, the picture is broadly positive. China's Shanghai Composite is 1.35% higher, with the CSI 300 up 0.75%. Hong Kong is 0.50% higher, and Seoul has risen by 0.40%. Singapore has fallen 0.75% on fears more companies will cut dividends in its real estate-heavy STI index, while Kuala Lumpur and Jakarta are modestly higher. Australian stock markets have taken a hit today with the ASX 200 and All Ordinaries falling by 1.0%, a slight improvement on earlier trading. Given how resource-heavy the leading indices are, much of the fall can be laid at the table of the Australian dollar. It rose 1.60% overnight, making Australia's exports in theory more expensive. We would expect the sell-off today to be more passing than structural, after an impressive month for stocks down under already. We expect upward momentum to remain undiminished for the remainder of the week. The US dollar is in full retreat. The successful conclusion by the European Union of its pandemic recovery package has finally opened the sluice gates of US dollar weakness. The US dollar is falling sharply versus the G20 with AUD, EUR, and GBP all notable outperformers. The dollar index fell 0.68% to 95.18, falling again to 95.10 this morning. Several major currencies have now made technical breakouts. AUD.USD rose 1.60% to 0.7125, consigning previous resistance at 0.7020 to history. AUD/USD now targets 0.7200 and then 0.7300. EUR/USD has risen 0.70% to 1.1540 with a technical target of 1.1800. GBP/USD has risen by 0.70% to 1.1720, with the chicken bones on the charts implying a target of 1.3000. It is much the same story across the globe with USD/CNY taking out support at 6.9800, setting up further CNY gains to 6.9500. Having mentioned the laggards of Southeast Asia yesterday, the US dollar rotation has duly washed up on their shores, with SGD, MYR, THB, and IDR all outperforming. The Indonesian rupiah, in particular, has gapped 1.25% higher to 14,640.00 this morning. Having fallen nearly 7.0% since mid-June, after the central bank directly monetized part of a government bond issue, today's rally will be a welcome respite. One suspects that the Bank of Indonesia has been selling US dollars to help things along. Of the fragile four, Indonesia remains the most vulnerable for several reasons. ISD/IDR has support at 14,456.00, its 50 and 200-day moving average. DMA pushing USD/IDR back under that level will probably be Bank Indonesia's first order of business. With COVID-19 still rampaging across Java though, nagging doubts from its economic impact will mean the rupiah will continue to underperform its regional peers. US dollar weakness has continued across both major and regional currencies in Asia today. After a long-range trading slumber for the past month, currency markets have finally awoken, with some real momentum behind the rotation out of US dollars and into recovery positioning. We would expect that to continue into Europe, and indeed, for the rest of the week. Only a failure by Washington, D.C. to agree on a new fiscal stimulus package looks able to chop the legs from the dollar rotation for now. With an election in the U.S. in 4 months, both sides have a massive incentive to get something over the line though. Oil finally breaks its ranges. The move higher in oil has come somewhat sooner than expected, but arrive it has. Vaccine hopes, EU stimulus agreements and a much weaker US dollar finally lifted oil through some critical resistance zones, ending nearly 2 months of range trading. Brent crude rose through $44 a barrel, filling its chart gap by rallying to $44.90 a barrel, before finishing the day 1.80% higher at $44.10 a barrel. WTI broke through $441.50 a barrel, on the way to a $42.50 high, before easing lower to finish the session 1.90% higher at $41.60 a barrel. Both contracts have edged higher today by a nondescript 0.20% as energy markets pause for breath in Asia. The previous resistance on both contracts now become pivot points. As long as Brent and WTI hold on a daily closing basis above $44 and $41.50 a barrel respectively, the rally should continue. Brent can potentially target its 200 DMA at $48.10 a barrel. WTI's 200 DMA at $43.40 a barrel, remains its initial target. A weaker US dollar should continue to support oil pricing going forward. The significant risk factors lie with the United States. Will the pandemic force mass movement restrictions across much of the country? Can Washington, D.C. create a new fiscal stimulus package in a compressed time frame? Both risk factors could severely impact consumption and confidence, kneecapping oil's rally. It is too soon, though, to conclude either. Gold follows the silver surfer to new highs. Silver led the way again in Asia today, rallying 7.0% on thin air in early trade, dragging gold higher on its coattails. That capped an impressive 24 hours of price action from both metals. Silver is now 12.0% higher over 2 days, and a breathtaking around 90% higher than its mid-March sell-off lows. There is little to explain the scale of the silver rally of the past 3 sessions. Liquidity and some large short covering are undoubtedly playing its part. Its dual precious metal and industrial metal status make it a prime candidate for a global recovery trade. One suspects that plenty of short-term FOMO money has suddenly discovered silver as well. In hindsight, silver has led stock markets, energy, and commodities higher since mid-March. Logically, until silver has a severe setback, momentum is unlikely to waver in those asset classes either. Silver's next technical target is $25 an ounce. With silver racing higher and closing at its highs for 3 consecutive sessions, it would be a brave man who picked the top there. Gold, meanwhile, has also had a busy couple of sessions. Gold broke resistance at $1,819, on its way to a gain of 1.35% overnight, closing near its highs at $1,842 an ounce. With silver jumping 7.0% this morning, gold has followed suit, rising 0.80% to $1,456.80 an ounce, having toughed $1,866 an ounce earlier in the session. Momentum remains secure with gold, likely pent up after narrow-range trading for much of July. Today's high at $1,866 an ounce form initial resistance. The all-time high at $1,920 is now within reach though, and a test seems likely assuming the global recovery remains uninterrupted across financial markets. Gold would need to record a daily close below $1,819 an ounce to call into doubt the bullish thesis. Subscribe our channel to receive the news as soon as possible. Thank you for watching.